Hey everybody, it's Zahnd from the Zahnd Team Real Estate Advisors coming at you live. It's been a long time since I've done this live, and one of the reasons I love doing it live, I can't stop the recording, I just gotta keep going. So I'm gonna come at you with the the November market update. So the month of November just ended. As you know from the 2 weeks ago, it was a pretty rough ride starting the mid-month report in November. So let's see how it kind of shaped up. So sit back, relax, and let's get into it. Okay, so before I dive into absolutely everything, the screen reminds me here is if you haven't been following us yet on Instagram, make sure you check it out at the Zahnd Team. The YouTube handle is the exact same, at the Zahnd Team. All right, so first off, I just want to cover some high-level macroeconomic stuff that's playing out here. And on top of that, I want to let you know about some really important dates to mark in your calendar, because these are going to be some really big moments in the economy to determine on, are we getting out of this inflationary kind of pressure here that's putting a lot of pressure on the real estate market, or are things going to potentially worsen? All right. So just to kind of kick it off, one of the first dates you're going to mark in your calendar is December 7th. So that's only 6 days away from today. And on December 7th, the rate hike announcement will be made. What the economists are expecting is that we're going to get another 50 basis point rate hike. And some are also believing that we're going to be softening to a 25 basis point rate hike. So between 25 and 50 basis point hikes are expected. And then there's one more expected after that. So it's not really just as important about how much the rates are going to go up. It also depends on what the message is after that to kind of see what does the Bank of Canada kind of believe its path forward is. Is it going to continue to raise rates? Are we making a win against inflation? So December 7th is going to be a really interesting date to see what happens. I'm believing that we're going to see a 25 basis point hike because we did come in at expectations on our inflation readings that just happened. The next date you're going to want to know about is here we go. Let me pull it up for you. December 21st. So every single month, we see the inflation from the previous month. So on December 21st, we're going to get the November inflation. If that came before the rate hike announcement, and inflation was a beat, then we would have been a little bit more bullish on not having the rate hike happen at all. Sorry about that. It just made some noise in the room here. Let me get into sharing my screen a little bit here. I want to take you over some other data that I think is pretty important here. Here we go. So as you can see here, the bond yields have been falling. And if I'm looking at the last 3 months, for example, we're at an all-time low here in the last 3 months. We were peaking up around these areas in October and then November again. And now things have really come down because we have been meeting those inflationary expectations. And what that's going to do is that's going to start pushing down the 5-year fixed rate. And as we can see here, the 5-year rate has been pushed down already. So it's coming in at 4.84%. So the high ratio mortgage. If you're a conventional mortgage, is a bit higher. But if you're high ratio, so less than 20% down, you're currently at 4.84%. So the mortgage rates have started to come down. As you can see, it was 4.99 mid-month in November. So one thing that I like to point out here is that the bond yields are being pushed down considerably further than they have been back in the 15th of November. As you can see here, we're even further lower that. So mortgage rates usually lag a couple of weeks, about 2 to 3 weeks behind what the bond yield market is doing. So if the bond yields keep going down, we can expect that the 5-year fix is going to continue going down with it. It's going to potentially affect that. Well, December 7th rate hike announcement is going to have a huge impact on whether or not the economy feels bullish or bearish. And then on the 21st of December, we're going to see how inflation, what the impact of inflation is. And if we beat expectations and inflation is coming down meaningfully, we can really expect those bond yields to continue to go down as people feel more confident to put their money into the market again, which will drive bond yields down. Okay, so if that all happens, that's going to be super bullish for the real estate market. And I believe, just like Warren Buffett says, you got to be greedy when others are fearful and fearful when others are greedy. Back in November, I was shooting this video and I was pounding my fist on the table about people, if you just are looking to sell and cash out of the market, you got to sell. I was making a big note about how just like in 2017, if the market becomes unstable, the government does step in and then interferes with the market, and just like in 2017, drove prices down. So I missed the prediction by 2 to 3 months because there was another 2 to 3 months of really bullish activity in the marketplace. But it was pretty close to the top where I'm like, you guys, if you're looking at selling, now's the time to sell. I feel like something's going to happen. Obviously, we saw that happening now. And now sellers, if you're looking at cash out specifically, just to cash out, yeah, it's not the best time to do that. However, it's also determined on what are your goals. If your goals are more important than the equity that you lost, then you have to make that move. If you had a house for 3 to 5 years, well, 3 to 5 years, you're still up 50% from when you bought it 5 years ago. So this little dip that happened here is not going to affect you too bad. It's mostly just the people that bought last year at this time that are really feeling the pinch. Or if you bought in February of 2022, which was at the peak of the market, you're going to be feeling some pain. So unless you're those specific people, selling isn't that bad. But if you're one of those people that bought literally in February or last year, yeah, you're going to be losing some equity on your home, no doubt. So then you just got to evaluate, is your goals more important than waiting? Because like I said, in 2017 here, just to pull this up, I know I'm kind of going all over the place here. But in 2017, for example, when let me get the average sale price here. Here we go. Sold listing. There we go. Monthly average sale price. In 2017, it took 34 months to get back to peak, right? So in April 2017, there was a peak in the marketplace. Interference happened, dropped out, bottomed out here. Took 34 months to get back here. So if you don't have 34 months to wait for your goals, then that's something that you might consider having to kind of bite the bullet on that. And also, just to kind of talk to you about something else is why now is the best time that you should be upgrading your home, because it costs you a lot less money to upgrade your home now than it did back in the peak. So I'm going to shoot a separate video about that. But yeah, those are the kind of the economic factors that are playing in and what's kind of all happening in the marketplace. If you have any questions, please feel free to reach out. So I covered bond yields. I covered the most important dates that are happening in the market. And as you can see here are the inflation readings and where we're currently sitting right now. Okay, so you're all up to date on what's going on out there. So let's go over the real estate market and what's going on in the Guelph real estate market. So as we covered already, the interest rates have inflected down with the bond yields going down. So we see that here. And what's currently on the market? Well, we see that we have 199 units on the market, and our 5-year average at the end of November is actually 199. So we're exactly on average with our 5-year inventory. With inventories on pace with our 5-year average. And then all the asset classes are right around their 5-year average mark. So inventory is super stable. And like I was telling to the team today, with all the things that have been happening and with the lack of buying in the marketplace, it's really astounding that the inventory is only at level. And it's only at level because in this kind of environment, you would expect that inventory would be much higher, kind of like a 20-30% increase in inventory that's sitting on the market. So for me, this is an indicator that when things start turning around, which I believe they are already, it indicates that it's now the best buying opportunity possible. Why do I believe that? Well, inventory is just at our 5-year averages, even though unit sales are down 40% to 40%, 40%, 25%, 25%, 40%. So half the homes are selling, but for some reason we still have an average of our 5-year average inventory. Our inventory is at the same level as it is on our 5-year averages. This should be about 20, 30, 40% higher than it currently is, which just means when tightening stops and potentially stimulus starts happening again, we're going to see that this inventory is going to get snatched up in a hurry. And if the inventory gets snatched up in a hurry, well, we all know what happens when more money is chasing fewer goods, prices will go up. So that is my kind of like to be a seller right now. Well, let's maybe talk about buying some investment property. So when the market does recover, your equity is swinging up with you. If you're looking at holding for that 34 months to recover your money, maybe it's the right time to buy an investment property. If you're a buyer looking to enter into the market, now might be a good time to get a good deal because competition is not very high right now. And when people start becoming greedy, that's when prices will go up, and that's when you should become fearful and then potentially looking at offloading your asset, kind of like what would have been a good idea in November of 2021. Right? And if you're just swapping in the marketplace, actually now is an amazing time to upgrade your home, and I'll shoot a separate video about that. And the downsizing, it's actually a really good opportunity to do that as well. So really selling, you're just selling, not the best. Buying, absolutely great opportunity. Changing assets, so going from one to an upgrade and going from your existing to a downsize, still a really good opportunity to do that as well. Because right now you're not going to be homeless. There's not that crazy competition where you're just going to have no opportunities to buy anything. Okay, so going back into the inventory here. Here we go. So I covered that. I covered the mix on the marketplace. So let's just take a look at the inflow. As you can see, inflow is very steady right now. It's coming in exactly at the 5-year average of 5.7 homes a day. So inventory flow into the marketplace is very stable. As you can see, we're right along the 5-year averages, which is great. Listing outflow, which I just covered, is down in November 40%, only selling 3.5 homes a day. Versus the 5.8 homes a day, which is our 5-year average. As you can see here, represented in this green line, we've had a shortage of sales for quite some time. So the outflow is not there. Units failed, surprisingly, came in at a little bit lighter than I expected. Only 89 homes failed to sell. I was expecting a little bit more than that. So 3 homes on average per day. But as you can see, still crazy elevated from where we usually are. So this is the home failed sales for 2022. This is the average, and this was last year, which obviously was a very hot real estate market, so not a lot of homes failed to sell. So let's take a look at average days on market. What are the other indicators in the marketplace? Well, at the mid-month report, this average days on market was up to 36, and now it came all the way back down to 30, which is right in alignment where we were. So it's showing a lot of stability right now, the real estate market. Even though the sales aren't there, average days on market is stable. And there's a few other stabilizing indicators I want to talk about. Right here, 2018 and 2019 were phenomenal real estate years. Extra bump, a 3 to 5% increase in average sale price. And those were between 21 and 30 days on average for days on market. And right now we're sitting at 29. So I believe the next couple of years are going to be pretty stable and flat, so long as there's not an introduction into a major stimulus, or there's not any kind of extra macroeconomic factors that happen that'll push inflation up, like disease and war. Let's hopefully that none of that happens again. So we're kind of like getting right back in a line to a nice balanced market here, which is good to see. And it's great for buying, and then great for swapping as well. And then the list price to sale price ratio, it's been stable for 3 months. We're getting, we hit the bottom in August of a 93% list price to sale price ratio. And over the last 3 months, it's been around 95, 96%. So again, showing a lot of stability there. And on a quarterly basis, we're at 96% here, which is up from 94 last quarter. So that's another bullish indicator that things are slowly starting to turn around. Markets are starting to stabilize as maybe the prices are kind of flattening and not falling down even further. Monthly average sale price sold. So I want to spend some time on this one because I feel like this is a pretty important one here. So as you can see here, peak to trough. So people, I shot a video the other day. It's like, well, it doesn't look like the market's stabilizing. It went down 3%. Yeah, I understand that going down 3% isn't ideal, but it's way better than dropping 27% from April to August. So from April to August, there was literally a steep decline. When you can see it represented here, here it is dropping all the way down to here. So that was a 27% drop from April to August, and from August to now, we've had a 3.7% drop. So yeah, that's quite considerably less than the falling knife we were experiencing, and the pace of market price going down has slowed dramatically. So I mean, for me, when I look at average days on market being very consistent, when I see list price to sale price ratio very consistent, and when I see average sale price pretty much staying around the $745,000 range, it's pretty consistent. We're seeing a lot of consistency starting to develop in the marketplace Plus, mortgage rates are starting to come down on the 5-year fixed side. So a lot of indicators are kind of pointing out to, I believe buying will start happening. Will it happen in December? Well, December is typically a very slow month for buying. Obviously, we have the Christmas holidays and all that fun stuff. But I think this is really setting up for a nice start to 2018. People are going to be interested in buying, especially if interest rates keep coming down and they're going to see some stabilizing factors in the marketplace. 3 months of stability should be good enough evidence to say, hey, look, it looks like things are starting to chill out. We could potentially enter the market again. Okay, if I'm going to keep going here, so just to show you from a quarterly perspective, we are at $743,000 average sale price on the quarter, and that's what it kind of looks like. We're gonna skip over this one. The only thing I want to touch on here is that, yeah, inflow is pretty stable. Obviously, outflow down 15% over our 5-year average. Failed sales are through the roof, but it looks like we've added some much needed inventory, but I don't believe it's enough. I really do think that if there's any kind of buying pressure at all in the real estate market, we're gonna see multiple offers again very quickly. Because there's not enough inventory for what's happening. With no buying, I would have expected inventory to be 20 to 30% up. I expected this gray bar, like in August. This gray bar is the existing inventory, sky high. One of the worst months we had in the real estate market was in August. And the regular inventory, the 5-year average, is this dark gray line. And here we can already see that the inventory is below the 5-year average. So it's not the best in terms of, it's not the best if you're looking at avoiding competition, because if there's any kind of stimulus at all or any kind of buying pressure, homes are going to start flying and then you're going to be in some competition. So if you're trying to avoid competition, now seems to be the right time to avoid that right now before it gets too crazy. And just to show you the comparison report again here, very interesting that I'll actually pull it up on the big one here. This orange line represents sold, and this blue line represents failed sales. And failed sales actually exceeded solds halfway through this month, but it looks like the last half of the month here in November really started picking up the buying pace. Buying pace accelerated quite substantially, and the failed sales decelerated quite substantially for this to end on the sales actually exceeding the failed sales, which is good. And as you can see here, as I've been saying, if you're on the market right now and you're not potentially the best positioned, you still have a chance to sell. And the reason I believe that is, if you look at the historical trend, outflow consistently outpaced inflow every single last 3 months of the year, October, November, December. Here's October, November, December. Here it is, here it is, here it is. As you can see, outflow is always exceeding inflow. So inventory is just coming off the market and outflow is exceeding inflow. So if you're on the market, you're going to become eventually the only choice. So you do have a potential chance of selling if you're on the market still. Okay, well, I know I kind of jumped around a lot of places there. I hope you enjoyed me going live again. I haven't done live in a while. If you have any questions, comments, please feel free to drop a comment below, get the conversation started. I'd be happy to reply to you. And if you're looking for any kind of assistance, please feel free to check out zahnteam.ca. Happy to give you a game plan on how we can help you strategize on